nearly every government, every central bank in the world has been printing huge amounts of money and borrowing and spending huge amounts of money. It's never happened like this in the history of the world. Never in recorded history have we seen so much excess. I'll call it excess. They think it's normal. They think it's fine. And this has caused many markets to go up a lot. You know, if you want to build a bridge, it takes a long time. But if you want to invest and you have a lot of money floating around, you just go on the internet and in 5 seconds you can invest in anything you want to. And that's what's been happening, and that's what's continuing to happen. There might be signs that's beginning to slow down. The Chinese seem to be cutting back some, not a lot. Well, not a lot, but they're cutting back. They're not expanding. Other countries say they're cutting back, and the U.S. says, "Oh, maybe we should cut back someday." But in the meantime, there's gigantic amounts of money floating around. It's going into markets. It's going into the real economy as well. It's artificial. If you see some of the things that, you know, the shipping business is just unbelievably hot right now because there's so much money floating around. The bad news is these things always end, and the better they get, the worse they get when they end. And as I said, we've never seen anything like this in recorded history, so be worried. I'm not short. I haven't sold short anything, but I am certainly worried. As I look around the world, bonds are clearly in a bubble. Bonds have never been this expensive in the history of the world, not in recorded history anyway. Property in many places, you go to Korea, you go to New Zealand, you go many places, property is certainly in a bubble. Stocks, many stocks. I mean, Amazon goes up every day. Tencent goes up every day. Samsung goes up every day. So some stocks performing a bubble, but many stocks are still not up. So it's not a complete bubble yet. So there you have stocks, property, bonds, all in bubbles or forming bubbles. The only thing that's still cheap, commodities. Silver's down 60% from its all-time high. Sugar's down 70% from its all-time high. Oil is down 50%. I mean, these are not bubble numbers when you talk about big declines, historic declines. But with all the money being printed, the asset class in the world that I prefer at the moment would be commodities because they're cheap when everything else is booming. I do own stocks. I do own stocks in places like China, Russia, Japan, other places. But I'm not rushing out to buy unless I find something really good.
All right, great answer, Jim. And I want to actually revisit some of the points you made there later on here in the discussion. But just staying at the high level for a moment. Last time you and I talked was kind of really probably about a year ago, sort of fall of 2020. And you were very concerned about these big macro trends back then, particularly all the intervention by the central banks and whatnot. So here we are a year later, and trillions and trillions more, both of monetary and fiscal stimulus around the world. So I guess first off, how much more worried are you now than you were even just a year ago when we talked? I think at the beginning of the pandemic, we probably would not have believed how much monetary and fiscal stimulus would be unleashed in the world in the next year and a half. So again, you were quite worried back then. How much more worried are you now?
Well, let me respond partially by saying, what comes after trillions? What are they going to do next? How much? They've already gotten into trillions, which you and I never could have conceived of. Most people could not have conceived of, but they don't want to stop. So I'm wondering what's after trillions? We're going to learn new languages, new vocabulary here in the next year or two if they keep going the way they're going. Well, I said, I'm not short. I know it's going to end badly. If something comes along that's good, I'll buy it. But Adam, I know this is going to end very, very, very badly. To repeat, the better it gets, the worse it's going to get when it comes to an end. I would suspect that when it ends, we're going to have the worst bear market in my lifetime. In 2008, we had a big bear market problem because of too much debt. Adam, since 2008, the debt everywhere skyrocketed, unbelievable. Even China has debt now. China didn't have debt 20 years ago, 15 years ago, but even China has a lot of debt now. Who's going to save us? The Chinese saved us in 2009 because they had a lot of money saved for a rainy day and they started spending it. They don't have a lot of money to spend now. Who's going to save us? North Korea? North Korea doesn't have much debt. That's why I say. But I don't think they have enough to save us, but I don't think they have money saved for a rainy day like the Chinese. I will say, Adam, it's a good time to be old in America because I don't have to pay for all of this when it comes to an end 10 years. When
the bill comes due, yeah.
My children, oh my gosh, the problems my children are going to run into in their lifetimes because of what these clowns are doing now. So I say it's good to be old. But you're right. It's going to end someday, and it's going to end badly when it ends. You said either currency collapse or economic collapse. You can have both. You can have one, and then it leads to another. In the 30s, we had both, for instance, around the world, and then we had war, a shooting war, and that's the really bad news is often in history when you have really, really bad times, especially worldwide, it winds up in shooting wars. It certainly did after the 30s. So it's not good news. I don't see good news. I repeat that in 2008 and 9, we had horrible problems with too much debt. Since then, the debt has gone through the roof by unbelievable amounts. And I know that's going to end badly. I don't want to scare people or anything else. I own shares. I'm not short anything as we sit here right now. If you know something for me to sell short, I doubt if I would, because I know how much money they can print. But I do know it's going to come to an end, and all of us should probably watch Wealthion to get prepared or to get worried. If we know what's going on, we'll get worried. And if we get worried, we'll probably get prepared, and then we might survive. Some people came out of the 30s very rich. Most didn't. Most lost huge amounts of money. But I hope that I survive. I hope you survive, and I hope all of your viewers survive.
But are there any potential indicators that you're watching that will give you a sense of when it's time to start battening down the hatches and at least get less long, if not go short?
These things always start where we're not looking. In 2007, Iceland went bankrupt. People said, "What? Who's Iceland?" If they noticed. Nobody cared. And a few months later, Ireland went bankrupt. Some noticed. A few months later, Bear Stearns went bankrupt. Now we're starting to notice. And then BlackRock went bankrupt, in the big bank in England. And then eventually, Lehman Brothers went. Well, then it's on the evening news. Then everybody knows. So my point is, these things snowball, and they start where we're not looking, and it may have already started for all I know. I've seen some small places having problems. But as I say, I'm not selling short yet because I know how much money these guys can print. And what I would suspect is going to happen, Adam, is somewhere along the line, next month, October, it's a good month. October, stocks go down in lots of places. Well, then they're going to really panic because they want to keep their jobs. And so they're going to print even more money. And so we'll have a rally. But I would suspect that would be the last rally because there's only so much. I mean, eventually the market says, wait a minute, guys. We've seen this movie before. We know how it ends. We don't care how much money you print. So that in that kind of scenario, we go down in October, and this is not a projection, but it's not a prediction. This is just a scenario. Go down in October, they print a lot, have the big year-end rally, and then 2022 is a serious problem. Probably the beginning of a serious problem because, as I said, the next bear market is going to be the worst in my lifetime because of all this staggering amount of debt.